I know that usually we do very technical property stuff, but I really just felt like today we needed to talk about taking action. And the reason why is because this lady over here has inspired me so much. Her name is Khutso. She's a chartered accountant, CFO of a consulting engineering company. She's a property investor, a very proud mother of three, and her focus areas are multi-let, student accommodation sourcing, and capital flips. During lockdown, these are the three areas that she was able to get success. Now, guys, the reason why I'm putting this up is to show you that when you've got a strong why and when you're committed to taking charge, these are the results you can get. So Kutsu was able to complete her second buy-to-let in Lone Hill. She received 100% loan to value from ABSA at 7.25%. She's got two multi-lets offers accepted, and I think they're in the region of 30 to 40 million rand multi-let. So we're talking big investments here. And she's done two back-to-back deals which don't require any money. She's been able to capitalize on that. And that was all during lockdown. Before I call her up, let me just show you one deal. This is her most recent buy-to-let opportunity that she closed in Lone Hill. You can see that it's just a very nice normal apartment. On the top left, you're seeing the high-level property values. So the asking price is 740. She offered 670, and she got a yes. Right, a nice 10% discount. On the bottom right-hand corner, you're seeing the cash flow, the rental numbers. So her income is 85,000. 85,000 would be nice. It's 8,500. She's put some money away for voids, because remember, it's going to be vacant at some point. She's got a bond repayment. She's got some insurance, rates and taxes, levies, and she's put some money away for maintenance. She's walking away with a nice 700 Rand passive income. Now, 700 Rand is not going to make you financially free. But how many of those do you need to start having a bit of a side hustle, to have some income that in case you lose your job, you've still got something to rely on? And also remember, she got 100% loan for this, which means she didn't have to put much money down. She maybe put some bond and transfer costs down, maybe 20,000 Rand, and she's making 700 Rand per month. Leverage, the power of leverage. Now, without further ado, I'm going to ask my guest to come and join us. Let's just see if she's there. I'm going to unmute you. Kutso, over to you.
Evening, Lawrence. Can you hear me?
Yes, all good.
Okay. Thank you so much for the warm introduction. I'm really honored and grateful to share this platform with you. Good evening, ladies and gentlemen. Thank you for sacrificing your time to join us this evening. Before I share with you my journey on how I found a way to buy my first investment property during these hard times, let me first start by sharing with you my why. We all have dreams and aspirations on where we would like to be one day. One of mine, obviously, is to get out of the red race, to own my time. And they say one needs to have a vision greater than where you are today, and that vision should scare you. My higher purpose and vision is to have an entrepreneurial and leadership academy school focusing specifically on the ethical and authentic leadership from primary level all the way to high school. This will be my way of giving back to society and to develop leaders and entrepreneurs of the future. I truly believe that the greater my success, the greater my ability to help others. Why property? Well, I always had a passion for property, specifically being a developer, building commercial buildings such as shopping centers, block of apartments, etc. So my passion of property really grew over a period of time. So why during the lockdown? Well, I generally have a very busy schedule with my job. So my day job as a CFO is very demanding and it takes so much of my time. I even have to, take work home and work late hours. So to add on that, I spent the last 2 years studying my master's degree, which I completed last year. Now, when I started, lockdown started, the industry in which I work, which is the built environment, was hardly hit by the lockdown. And the level of activity drastically reduced. And I found myself with more time at my disposal to invest in my wealth creation. Unfortunately, I was also one of the people who were really affected by the lockdown. My employer announced that our salaries was going to be reduced by 30% at the beginning of the lockdown. And that happened all the way from April up until August. Now, ladies and gentlemen, that was, my only source of income. I did not have any other income. And I had to use my savings, to fund my master's degree. And I had to resort to whatever was left in my savings to make up for the 30% reduction in my salary, which obviously was not enough. So it was really, really tough. And how did I get started? Like Lawrence mentioned, property education, knowledge, knowledge, knowledge. And knowledge is only power if you apply it. So around June last year, my partner told me about this property education offered by Legacy South Africa. After reading about what the course was about, I was very excited and I really didn't think twice about attending. Lawrence was facilitating the session in Pretoria, and I was so inspired to learn about how one can become a professional property investor. And I did not hesitate to sign up for the course. So I invested in the property education. I learned a lot about what a property can offer you. Investing in this education broadened my horizon, and it was the best decision ever. So I completed my education, and at the same time, I was busy with finalizing my dissertation, which I submitted in December last year. And it was time for me to plan the holiday for the kids, and I took them for a first overseas trip. And a few months later, coming back, COVID-19 hit South Africa and the world, and we're in lockdown. Now, during that time when I finalized my education and I submitted my dissertation and I have all this knowledge, I did not apply it. I did not do anything. Now, having so much time at my disposal, I never had to put time, to really practically start my property journey and apply what I've learned. And this really hit me very hard because I had taken a decision earlier that I could be having, had I started earlier, I could be having an investment property that was generating a positive cash flow and giving me passive income. And that could have gone a long way during these hard times because it was much needed money. Then I had a mind shift and I went back to my property education material to recap everything that I've learned. I attended a lot of webinars. There were a lot of free webinars during the lockdown. And in the process, I registered for a 12-week course in property development and the Mind Power course. And I wrote my vision down. I had to come back to myself and I have to do an introspection. I wrote my vision down. I wrote my mission statement, my goals, and all my short-term goals, and updated my vision board. And I wrote the affirmations. And every morning, ladies and gentlemen, I'm so diligent, in really reciting my affirmations. And just to share with you a few in terms of my affirmations that really, really encouraged me and really changed me from within is, I would say every morning that every day I take action. I'm living my life with purpose and passion. I experience gratitude for everything I have in my life, and I can achieve anything I set my mind to. Prosperity is drawn to me. The more I give, the more I receive. And the more I receive, the more I give. And I'm deserving of abundance in my life, and I'm firmly determined to achieve anything I set my mind to. Now, ladies and gentlemen, saying this affirmation really, really made a huge transformation from within. My mindset was changed and I felt positive, encouraged, motivated, and ready to conquer the world. So I attended the webinar hosted by Lawrence around May this year. And at the end of the webinar, he spoke about a coaching program that they have. And I knew that all I was missing was a property coach. And I remember that during my property education, they spoke about the importance of having a property coach. And I made a decision to sign up for a coach. And that was the best decision and the wisest decision I ever made. And what actually made this a success is that, number one, I made a decision to invest in my future. And I said to myself, if I put the same level of commitment, dedication, diligence, and passion and energy that I had towards my career and academics in my property journey, I knew that I can never go wrong because I was so hungry for the change. I knew the impact of not having a second income, what it can do to you. So I took a massive, massive action. And I have a program twice a week where I actually check out deals on property website. I analyze deals. I run my numbers. I contact estate agents. I find out what's happening. And all of these are aligned to my strategy. So during the lockdown, before they could actually and really looking into my strategy, planning what I needed to do. I used my property app. I subscribed to Lightstone, the TPN, everything that Lawrence has spoken about, doing the due diligence, all of that I did. And on 1 June, when they actually uplifted the restrictions, I had already made appointments with a few estate agents, and I went and I viewed property. And remember, this was my first experience. I went and I really put into action everything that I've learned. You know, I had my camera ready. I was looking for defects because I knew that all of these things, if I look and follow to the T what I've been taught, they will actually influence in terms of what my offer is on the properties. So even today, I still apply the same level of consistency, and I've achieved a lot in such a short space of time, and I'm really, really proud of my achievement. Now, just to tell you how I got started is that one of the investors in the network group actually put out there that they are looking for somebody to source them a deal. So they were very specific in terms of the ROI they were looking for, the gross yield they were looking for, the areas that they were looking for. And I did my research, and I had all this line up in terms of based on what the investor wanted. Then I went out, I viewed the properties, and I made, you know, those offers, or I actually secured, you know, the selling price. And in this process, I actually found my first deal, interesting enough, and that's how I got my first deal. But just to also share with you that after I went through the property education, I also had my structure in place. So I registered a company that I knew that when I get my first deal of buy-to-let or multi-let, I want to do them via the company. And the back-to-back or the property flip, I wanted to do in my personal name. Now, one of the things that I consistently apply all the time is the 7 golden rules of coaching that I was taught during the property education. And ladies and gentlemen, those golden rules are: number 1, you make money when you buy. You make money when you buy and not when you sell the property. Now, what does that mean? It means that the offer that you make, as much as it's a cheeky offer, it must be an informed cheeky offer after performing all your due diligence, deal analysis, and running the numbers. And that number, ladies and gentlemen, must always be below the market value of the property, because that means that you do have equity in that deal. Number 2, always have 2 exit strategies, because you never know, things might change, and you must exit strategies. Number 3, buy for a qualified demand. You need to know who you are buying the property for, who is your tenant, who is your your customer. So you always must have that in mind. And follow the money. An example I remember they gave us at the property education was an example of Starbucks or Curo schools. You know, where Curo is, you will know that, especially if your interest, your strategy is around the buy-to-let or multi-let, you know that you want to buy a property around an area where there are schools, where especially it's a family and it's easy. So always follow the money. And number 5, which is what Lawrence touched on, become a money raiser. Find the deal and raise the money. And always be professional in everything that you do. So every entrepreneur needs to be a money raiser. So you need to sell your dream to somebody else. Number 6, be safe and be legal. Don't sign anything that you don't understand. If an estate agent gives you an OTP, don't sign it on the dot. Take your time. If you've got a property attorney and you want them to go through it, do that. Make sure that you understand what you are signing, and always make sure that it's legal all the time. And lastly, and importantly, take massive action. Nothing won't happen by itself unless you take the action. And I have seen that if you take the action, things start to move and you're much closer to realizing your dreams. So what are the lessons that I've learned through this journey? Is that opportunities are everywhere. And there is so much abundance, ladies and gentlemen, out there. The more you are out there, the more you see that there is just so much abundance. Even during these challenging times, believe me, people are so distressed. A lot of sellers that I found during my journey is that they cannot afford the bond, or they have lost their jobs. Some of them, they're actually retiring. You know, it's becoming so expensive to actually maintain and manage the property. And always when you buy a property or when you do your due diligence, always ask, what is the reason for selling? Because that, ladies and gentlemen, you can use it to your advantage. And you can also use it to make sure that you structure your deal because there's so many creative ways of structuring your deal. So it's very important to know the reason why they're selling and if there's a bond on the property, because also on Livestone report, you can also see if there's a current bond. And always ask the question, because there are a lot of ways of structuring the deal where you don't actually have to use your own money. And have the right mindset. Persist, no matter how tough it is, never give up. Because if you're giving up, you're actually giving up on your dream, on your why. And get a property coach. You need that sounding board. You need to surround yourself with people that have walked through the journey, that have experience, and you can soundboard a lot of ideas. That when you have a property coach, they can guide you to what you want in your strategy. And learn to walk away if the deal does not make sense or it does not meet your risk appetite. Don't just buy emotionally, learn to walk away. If the numbers don't make sense, ladies and gentlemen, just walk away. There'll always be another deal. And use your time efficiently, like Lauren says. Make a verbal offer before you go. Before you go out there, just get a sense of whether this offer will be palatable to the seller. And I've applied the same principle. In the multi-lets deals, the offers that have been accepted, I use the same thing. I made a verbal offer. Those questions that Lawrence took us through, I asked the very same questions to the estate agent. I did my homework, and I only went when I knew that what I put verbally as an offer, it's likely to be accepted, and it was accepted. And also learn to negotiate strategically, like I've mentioned, check out the reasons why the seller is selling, the conditions of the property, and all of those things you can use to negotiate your offer price and the Livestone information that is there. And ladies and gentlemen, the real estate business or the commercial real estate, it's about relationship. It's all about relationship building. Build relationship, have relationship, because once you are in the network, you've got a property coach. They have so much network. They can link you up with so many people. Even the power teams, they are former students who are a success, who have walked the journey. You now starting to have the context. Things now start to make sense. And your estate agents also build relationship with them. Check out on them what they've got. Just to share with you, one of the back-to-back deals, it was actually through a relationship with an estate agent. Before it was listed, they actually contacted me and say, I remember when we met, you did say that you do capital flip. So I have this property. Do you want to come and have a look at it? I ran my numbers, I did my due diligence, and then I went to view the property. And that's how I got the deal, through the relationship. People need to know what you do, what you're looking for, and that you are there as a property investor. Now, just to share with you my key advice in this property journey, follow and apply the basic property principles all the time. You'll never go wrong. Always run your numbers, and do not be an emotional investor. Be creative in how you structure your deals. Use OPM, other people's money. Property gives you options. And be patient and weed out all the negative thoughts or the customer mindset. Now, what is a customer mindset? A customer mindset is a person with a mindset that is focused on the cost of something instead of the benefit of something. They focus on whether or not they can afford something instead of what benefit that something can bring. They believe that spending money will result in less money. A person with a customer mindset immediately start to count themselves out, and they are intimidated by a cost of a real estate. Like Lawrence mentioned, the sum of the multi-lets is a 30 million deal. My mindset was not a customer mindset. I was not intimidated by that amount. I did not even ask myself, how am I going to get that amount? Will I be able to be approved? And as a result of this, what tends to happen now when you have a customer mindset is that you block, you start to have a mental block. And this mental block, unfortunately, it is detrimental to in real estate, because being mentally blocked, you won't be able to consider creative ways of financing your deal, like seller financing, as an example, which you can actually use to finance your first deal. And see and visualize possibilities, opportunities in abundance. Like I said, they're everywhere. Only you have the power, ladies and gentlemen, to create your wealth. Remember, you are the master of your destiny, and be intentional in what you do. What you put in is what you're going to get out. And the key to long-term success, consistency. Consistency. Enjoy what you do and have a passion for it, and the results will be so rewarding. I just want to leave you with the last words from Anthony Robbins. He says, talk about something, it's a dream. Vision it, it gets exciting. Plan it, it becomes possible. And schedule it, it becomes real. Thank you, ladies and gentlemen. I really hope that you have taken something out of my experience and what I've shared. And never give up on your dream. Anything is possible. Thank you, Lawrence.
Awesome, Kutsu. Thank you so much. I kind of feel like this is an applauding moment, and thank you. You know, it's so nice to have somebody come and share this success story, you know, someone who's succeeded in such a hard time. And guys, there are Kutso's details, her number and her email address. If you do want to contact her, please can I just ask you that you WhatsApp her as opposed to phoning her. She's obviously a busy lady. I'm sure she's happy to help and happy to meet with you. Just obviously be conscious of her time. So just before we get into the Q&A and we see what Kutsu's answers are to some of the questions, I just wanted to quickly remind you about our online property educational course. Kutsu has mentioned a couple of times when she got the education. So we have built a online university. It's the propertybootcamp.coza. Go check it out. There are some free courses for you to get started on, and then there are some paid for courses. One of our best performing or most popular courses is the running the numbers or the deal analysis course. That one seems to be the most popular so far. And in the running the numbers, you're going to learn about, return on investment, return on equity, rate of return, all of those good things. There are essentially the lessons that you would get for this specific one. And all of our courses also have quizzes so that you can apply the knowledge on a practical example and see if you've really understood the concept. So, without further ado, I'm going to now open up the questions to the audience. Kutsu, you can still hear me, hey?
Correct. Yes, I can, Lawrence.
Okay, cool. Let's see here. I'm going to ask this question first. What is the disadvantage of buying an investment property in your personal name? So the disadvantage of buying a property in your personal name, I'll go first, and then Kutsu, if you want to add anything to it. I think, Winnie, it's a good question. The disadvantage is that everything is linked to your personal name. So let's say you buy a property in your personal name and something goes wrong, a tenant stops paying and you're unable to service the bond. What the bank is going to do is they're going to attach all of your personal assets to that property. So if you've got a paid off car, they are going to then take your car, repossess it to pay off the property. So whatever's stuck in your personal name becomes a personal liability. Kutsu, would you add anything to that as a risk of buying a property in your personal name?
Lawrence, I actually wanted to say the same thing in terms of should the property not generate any passive income anymore, should the cash flow be negative, then you are also indebted. So it's also some of the things that you need to be careful of, because now you have to pay the bond. And if you're unable to, the consequence is exactly what Lawrence just mentioned.
Awesome. Another question here. This one's good. Kutsu, maybe you can answer it. What is the biggest challenge for starting investors?
The biggest challenge is, number one, believing that you can do it. And taking the action, because a lot of people, we do have the knowledge. We go through a lot of YouTube videos, but the challenge is actually getting started, taking that first big step and getting out there. And I think also if you don't have a property coach, I'm repeating that again, or you don't have somebody who's walked through the journey, it becomes so difficult. Because before signing up for a property coach, I had so many questions and I wanted to run it past somebody else. And not having that person, it becomes so challenging because you can get stuck not knowing what to do. So it's very, very important that you surround yourself with somebody who's walked through the journey. And a lot of people who are free to share their knowledge and how they've done it, but it's all about taking action. Start somewhere, whether it's sourcing, but you just need to start somewhere.
Okay, cool. And then there's another question here around seller finance. I know you mentioned that. So the question is, what is seller finance and how does it work?
Okay, so this is obviously based on my experience and what I've also dealt with my property attorney. So a seller finance is using the seller to finance the deal. And I'll give you an example. Let's say a seller has a bond on the property and they're unable to pay the bond and they want to sell. So like I said, always find out what is the reason. Now, what you can do, instead of putting your money in, you can get a property attorney to draft an agreement. So it also fall part of what we call also installment sale agreement under the Land Alienation Act, which you need to understand and also have somebody who's an attorney to explain it to you. So what you do, you enter into an agreement with the seller and you say, you know what, I'm going to take over your bond. And I will pay the bond. So what you do is that you can also find somebody to rent out. So let's say, for example, I'm saying to the seller, I'm going to buy your property in 12 months' time or in 24 months' time. And you set the selling price at that point in time at the beginning. Now, the selling price that you do, in most instances, it will be the balance of outstanding on the bond, what is left in the bond. And you'll find that in most instances is below the market value. Now, you negotiate and you secure that price. And then you can find a tenant as an investor who can actually rent out that place and use that money to pay over the bond, to pay the levies, to pay the rates. And then over a period of time, you can also buy the property from the seller. But Lawrence, please fill in and then in terms of adding more into, because there are other ways in terms of using the seller financing.
Yeah, no, I think you're spot on. It's essentially partnering with the seller so that you don't have to buy the property. You just get into an agreement with them where you, add value to the property and sell it for a higher price. There is a YouTube video on my channel around seller financing, so you can go check that out. Here's a really great question that I wanted to pose to you, Kutsu. It's around the back-to-back strategy. So there's a question here from Sulungeka that says, what is a back-to-back? And then Tabu also asked, how can I start property investing even though I'm a student and I have no access to funds? And I think the back-to-back strategy fits nicely into both of those questions. So could you explain, firstly, what is a back-to-back and how someone without an income can get started using the back-to-back?
All right. So with the back-to-back, it's another way of saying a capital flip. So meaning that you secure the property and you find a buyer. So what's important with the capital or with the back-to-back is you must always line up people whom you're going to sell the property to. And another thing, it's all about the area. You need to find an area where it's in high demand, but there's low supply. Because such areas, that there are a lot of people who wants to be in that area and you'll actually be able to sell it very quickly. So with the back-to-back is that you put in, there will be a first OTP that you do with the seller. And then it will be subject. It's very important that your OTP has suspensive conditions that also protect you as the purchaser. So one of the suspensive condition, it's very important that you put in there that is subject to you obviously finding an investor or finding somebody to actually buy the property, and you put time in terms of by when you want to do that. And then you will find during that time on your suspensive condition, then you find those buyers that you already line up regarding the deal. Now, you can also put as part of the suspensive condition, based on the condition of the property, depending on whether it needs minor renovations, there and there, you can also factor it in that you would like to do those, because what you do is that you also appreciate the value of the property. Then you can also do that. And then once you have done that, the capital appreciation of the property is there. So what you want to do with the back-to-back is that the second OTP that you're going to find with the buyers that you have lined up, it will be subject to the first OTP. It will be subject to the first OTP, and it's always advisable to use the same conveyancer in terms of their attorneys. And you must always seek advice as well and make sure that the OTP cover and they're legal and they're safe. And now what tends to happen is that the transfer, so the second OTP actually funds it's actually fund your purchase in terms of purchasing that property. So the transfer happens also simultaneously in terms of you as a first buyer and then also the second buyer. I hope I'm not confusing anybody, and then you can actually follow what I'm saying. But you use the second purchaser money in actually purchasing the deal and making money out of it. So I buy the property as an example. I'll buy the property at 500,000 or my first OTP. And then I factor in, I do my numbers. I know how much the renovation is going to be. And I know in terms of the market what it's worth. And I'm going to offer it pretty much at a discount on terms of the second buyer because I want to sell it quicker. And then I say to the second buyer to say the property, I'm going to sell it at 600,000, but I know that in the market it's worth 750,000 as an example. Now, the second purchaser will buy it at that price from me in terms of between my OTP and their OTP. But my OTP with the seller is actually at 500,000.
100%. Yeah. So guys, a back-to-back, really simply, it's you're the middleman between two people. This person wants to sell, this person wants to buy. So you essentially buy the property from them at a discount, you sell it back to this person for profit. What's great about that strategy is you don't need money to do it. You essentially use the new buyer's money to buy from the seller. So Tabo, for you starting out as a university student with no money and no way of raising finance, you probably want to look at a back-to-back because there's no money required. You could also look at a sourcing strategy that's kind of like an estate agent, but you work for the investor. So someone like Khutso, who is doing lots of deals on a regular basis, she would likely pay you, I don't know, 10 or 15,000 Rand if you were able to bring a good deal to her. Kutsu, am I right in saying that, if somebody had to bring you a great deal, you would pay them a fee, a referral fee for finding that deal?
Definitely. And part of the sourcing fee, sourcing is as well is that you can have an agreement between you as the sourcer and myself as an investor, and the sourcing fee will be payable. So there are two options. You'll find that some investors is payable upon transfer of the property, and with other investors is payable upon me as an investor having successfully signed an OTP with the seller and being the OTP being accepted by the seller. So definitely that's the best way. You don't need any money. All you need to do is to find investors and run your numbers and make sure that the deals that you have are lucrative. So it's also important to know, especially if you've got investors, have a meeting with them, know what they're looking for in terms of the types of ROI they're looking for, so that when you source, you're actually intentional. You know the person that you have in mind as an investor to pass on the deal to.
100%. Yeah, so sourcing, back-to-back, rent-to-rent, go check out those three concepts if you got no money. Let me see here. Zbu asked, Lawrence, where do you get a comprehensive rental statement? So he's asking about how do I get a proof of rental. Guys, that's tricky. I like to see bank statements, but not every seller is really willing to share their bank statement information. But either I want to see annual financial statements that have been signed off by an auditor, I want to see a bank statement with like the Standard Bank logo, or I want to see some sort of rent roll. If they don't provide me with any three of those, I'm not going to move forward with the deal because then I don't know what I'm buying. So I hope that answers the question. Two more questions. So Sulungeka is asking about buying on an auction. So I would say auction is a good way to meet motivated sellers and motivated properties, but there's a lot of risk to auctions. You could buy the wrong property, and there's a couple of legalities within auctions that makes it tricky to invest. I actually think that's a good title for the next webinar, is how to invest in auctions. But what I would say, Sulungeka, is if you've never invested before, go to an auction, but don't buy anything yet. Rather get the education, rather just know what you're doing, because as I mentioned, if you make a mistake in property, it's usually a big one, and it's an expensive one. Let's end off with one last question. What is the downside of buying off plan? Kutsu, do you want to go first with giving your answer there?
Sure. So I haven't bought anything off plan, but what I can advise is that, number one, you need to do some background check and know in terms of the developers, the people that are doing that, whether they've done such, they're credible, number one. and if everything has been approved. So, I have not bought a property off plan, but if, for example, it's a development and there are other people that have already bought and they're occupying the place, and you can also see, or maybe they've got a demo house, you can see how the look and feel of the property is going to be. Get the building plans, have a look at them, and ask as many questions as you can, because sometimes, and I don't know, I'm not saying it has happened, but sometimes you might find that what they're selling in the end product is not what you bargained for. So it's always, for me, I'd rather say, let me first wait and see what they have built in terms of other people that have bought before I can actually buy, just to see the condition, just to see the quality, and also if the builders are certified in all of that. So it's very important to get that information, before you really invest in such, and see which banks they're affiliated with, because most of the banks will not affiliate themselves with people that are not credible.
Yeah. Definitely. I think to add on that, Ronald, your question is great. I think if you're buying off plan, you're getting into the customer mindset. The problem is off plan deals aren't financially lucrative. Off plan buying from a developer means the developer's making the money. You're not going to make the money. The basic example I can use is, most developers will say, you can buy this property for under $1 million, which means you've got no transfer costs. Plus, we'll give you a rental assist for a year. Plus, you don't have to pay levies for the first year. Plus this, plus that. They're trying to add all of these benefits so that you think you're buying a good investment, but the ultimate reality is you're not, because the rent that you're going to get is not even going to be able to cover your bond. When the rental assist disappears and when you actually have to start paying levies from year 2 or year 3, it depends how they try and market it, eventually you're going to be in a negative cash flow situation. So my advice, having seen a lot of off-plan properties, none of them make financial sense. So if you want to buy a property off-plan, you got to realize you're buying an asset that's going to be negatively cash flow. At least for the next few years. The only benefit I see from buying off plan is that you maybe can buy at a discount, and over the next 3 to 5 years it appreciates in value and you can sell it for a bit of a profit. But from a monthly rental point of view, trust me, off plan does not work. Let's see here. So last question for you, Kutsu. There's a girl by the name of Lorato Ndlovu. She's actually a student of mine as well, and she's asked if you would be willing to do a coffee with her or a Skype chat. She'd like to talk to you about what kind of properties you're looking for and if she can start sourcing for you. So would you be interested in something like that?
Yes, I'll be very happy to have a meeting with her. Thank you.
Awesome. Well, I've got her email address and I've got yours, so I'll introduce you guys over email. As two students of our coaching program, I think it's great that you guys connect and see if there's any kind of possibility to do business together. But otherwise, guys, it's already 7:15. We try and keep our events quite short. Kutsu, just a massive thank you from our side. Thank you for availing yourself and sharing your knowledge. It's been an honor.
Thank you, Lawrence. Thank you, ladies and gentlemen. Have a good evening.
Awesome. And guys, as always, we'll have the recordings. Afterwards, please just go and check on our YouTube channels and come and check our next event, which will be happening in 2 weeks' time. We'll probably do something around auctions because I think that's quite an interesting topic. But until next time, happy investing.